What's up, everybody? It's Stock Picks by Tim, and I would have posted this yesterday, but I just didn't have the time. So I'm going to post this now, and I know it's really late, but here we go. So I've got about 15 minutes cut up of the earnings. It was about a 40-minute earnings call, but I cut it into 15 minutes. I'm going to leave that at the end for you guys, but first I'm going to go over a couple of key points out of the earnings that I got out of it, and then we're going to go over the chart and just what's been going on and my thoughts on some supports and resistance levels lately. But first off, currently Cleanspark has ambitions to be at about 4 exahash by the end of the year. So this quarter they saw a $41.2 million in revenue, and of that 41.2 million revenue, the energy segment saw an increase, and they saw 4 million in revenue for just the energy segment. So that's great. They've been seeing quarter over quarter growth, and this has mostly been driven by their Bitcoin mining, of course, but it is good to see some news lately with their microgrid and that they have been increasing revenue there. So that's a big deal. That's a huge positive for Cleanspark in my opinion. Now their gross margins are actually increasing, and currently they do have 5.2 million in cash on hand. They have 30 million in Bitcoin, and they do say that they believe their strategy is to carry most of their money in Bitcoin because they do see it as a store of value. They do believe in it, and they have currently $169 million worth of mining equipment, and they have $117 million already paid for their future miners, with $39 million remaining to pay. And that is about 22,000 more miners they're expected to arrive over this year. And in terms of exahash, you're looking at about another 2.17 exahash. They're right now at 2, getting about 10 Bitcoin per day. And this is regardless of their immersion cooling, and this is going to give them even more efficiency, and they are just working on that. We'll likely hear more about that in the future here, but that's another thing that they did mention. They did mention their immersion cooling. And as for issuing any shares potentially, they said they might utilize it in any M&As or merger and acquisitions. For the most part, it seems like they are going to continue to try to sell their Bitcoin and make their money to acquire more Bitcoin, and I do like this strategy. I think it's worked out so far, and it's a great idea. The only way that they'll look like idiots for doing that is if Bitcoin just overnight runs to 100,000 and you sold your Bitcoin at 50,000 or something. That's the only way I would see them, obviously looking bad for doing that, but I think that's a good way to continue to expand. And before I give you guys that edited earnings call, let's get into the chart real quick. We are on an uptrend here, and we hit this like 1050 right here before just coming back down, and you will notice we're going to go out a little bit. We're going to go out to about the 6 month here, and you'll see that it has a strong support at this level, this 1050 level. It just tends to bounce off of it. It does it here again, it does it right here, and now that became our resistance. So we did run a lot, so it's fair to expect a resistance at some point. We ran up hugely, and I do expect us to likely come down. I think the market's going to have a red day. We've got more inflation fears. The inflation was huge, and the main worry about that though was that the Fed is going to be raising rates sooner rather than later, so that's a bad thing. So likely we're going to have a red Friday. That's just my assumption, and if we do, Cleanspark probably won't have a great day, of course, and Bitcoin's been kind of not doing too great. It's been kind of stagnating. We're going to look at Bitcoin real quick. Yeah, we hit very close to 46,000 before just pulling back. Now we're in this kind of consolidation. Keep an eye on about 42.8. If we break that, that does seem to be a short-term support. So if we break that, we are going to be coming to lower levels. So keep an eye on that. We're looking okay lately, just kind of bouncing around, but we are cooling down from our nice little run we had. So that's one thing to think about. If the market's very red, maybe Bitcoin will be red as well, because sometimes they do kind of correlate together. There's been divergences, but for the most part, the market and Bitcoin lately have been kind of running together, especially tech, like in terms of NASDAQ. So we'll see how that goes. We'll see if we can break that 1050 and hold. But that's basically it for you guys. Make sure you like and subscribe if you like this content, and let's get into that earnings call.
As presented in our Form 10-Q, which has been filed with the SEC, our total revenues increased exponentially in the first quarter of 2022 versus the same quarter of the prior year. Total revenues for the first quarter were over 41 million compared to 2 million, representing an increase of over 17x. The overwhelming majority of this revenue was driven by our digital currency segment, with revenues totaling almost 37 million. The investments we've made to date have contributed to these record revenues. Our energy segment saw a healthy increase as well, growing to almost 4 million in the first quarter of 2022 from 300,000 in the same period of the prior year. The majority of this growth was due to the acquisition of SolarWatt in the second quarter of 2021. Revenues also saw sequential growth in Q1 versus the prior Q4, as revenues increased almost 52%, growing from $27 million to $41 million. Again, these revenue increases were driven by new installations of top-of-the-line Bitcoin miners and a hash rate, which increased throughout the quarter. Looking at gross profit, you will see the increase in revenues translated to greater profitability, particularly due to the high margins that Bitcoin mining brings. Gross profit in Q1 increased to $32 million from $930,000 in the same period a year ago. Gross margins also increased dramatically to 79% in Q1 from 41% in the same period last year. When comparing the company's performance compared to the most recent quarter, gross profit increased approximately $12.5 million to $32 million from approximately $20 million, representing a 63% increase. Our gross margins continued to increase sequentially as well, increasing from 73% in the fourth quarter to 79%. Turning to our balance sheet, we had approximately $5.2 million of cash on hand at December 31st. Additionally, we own 633 Bitcoin with a book value over $30 million, bringing the company's total liquidity to over $35 million. The company converted 650 Bitcoin to USD during the quarter to pay for growth CapEx and operational expenses. And going forward, we expect to maintain minimal cash amounts on hand as we see Bitcoin as a store of value. During the first fiscal quarter 2022, the company raised almost $68 million in equity proceeds, most of which was used for growth CapEx and purchase of Bitcoin miners. On a final note, I want to turn your attention to our machine commitments. We have signed commitments for over 20,000 additional state-of-the-art Bitminer S19 machines, which will almost double our current hash rate. On these commitments, we have already funded deposits of over $117 million, which will be applied to future deliveries. And I want to point out that this $117 million is already paid for using proceeds previously raised through conversion of Bitcoin and issuance of equity. The remaining cash commitment for the deliveries is just shy of $40 million, and we expect to make these payments and take delivery monthly through October of this year. Additionally, over half of these miners to be delivered have infrastructure already committed, and we expect to secure infrastructure for the remaining miners in the coming months.
We intend to be a top 5 publicly traded miner in terms of our hash rate, efficiency, profitability, and commitments to sustainability. In terms of hash rate, we've achieved 2.1 exahash with a goal of 4 exahash by the end of the year. We plan to over-deliver on our promises. We have assets and contracts already in place for approximately 4 exahash of miners, with the intention of exceeding that by many multiples as we thoughtfully secure sustainable energy. But we believe we are one of the most efficient publicly traded Bitcoin miners. Right now, our energy cost to mine 1 Bitcoin at our wholly owned locations is approximately $4,500. As part of this strategy, we are investing heavily in immersion cooling. We expect to have our first batch of immersion cooled machines hashing at our Norcross facility by the end of the current quarter. And as many of you on this call know, immersion cooling helps us to be more efficient. It also reduces otherwise unnecessary energy loads, and we believe allows our machines to run longer and faster, by 30% or more by some estimates. Lastly, I want to briefly talk about governance. Over the last quarter, we took efforts to bolster our transparency by issuing monthly Bitcoin production updates. Articulating our vision and strategy in this call is another way we hope to demonstrate transparency in the way we make decisions. We are working to achieve value for our shareholders and the millions of people worldwide that rely on the Bitcoin blockchain. Our attention to governance, including board oversight, underscores the commitment to be an ethical company. We have an obligation to do what is right, just, and fair, and to avoid harm.
From our perspective, capital allocation is a very important priority, especially since we are involved in a business which requires significant investment in CapEx. When coupled with strict fiscal discipline and a keen eye on our CapEx costs and cash operating expenses, the proper allocation will help propel our growth even further. Let me share with you in detail how we expect these individual levers will be used in our capital strategy going forward. Foremost, acquiring debt capital and leveraging our balance sheet is an obvious opportunity. As you are aware, we currently have no long-term debt, and we see substantial opportunity to utilize our strong balance sheet to invest in growth. The cost of capital related to debt instruments is the easiest of the three types of capital to forecast and budget for, and frankly, the lowest cost of capital currently. We are actively seeking to inject debt into our capital structure at reasonable rates, and we only expect to see the cost of debt capital become more favorable as time goes on, especially as traditional debt markets continue to warm up to the crypto industry. On a side note, we have recently established new commercial banking relationships, which we are optimistic will lead to lending at more traditional rates. As I mentioned, our balance sheet is strong and presents an immediate opportunity for leverage. The overwhelming majority of our mining portfolio consists of top-of-the-line miners, nearly all of them the latest generation S19 models. We believe this makes us attractive to asset-backed lenders, and we are exploring the use of ABL or similar facilities to provide the growth capital needed to expand our operations. The second lever available to us is our Bitcoin holdings. We are in the business because we believe in the future of Bitcoin, both as a store of value and a medium of exchange. As a miner, Bitcoin is our functional currency and how we get paid. Therefore, we think it makes sense to use Bitcoin to generate even more Bitcoin. Meanwhile, we'll continue to be opportunistic about selling Bitcoin at the right prices. While we will convert some mined Bitcoin to USD, we expect our Bitcoin holdings will increase incrementally over the long term, because as I mentioned earlier, we believe in the long-term value of Bitcoin. And there's one other point I can't stress enough. Our approach to hodling is very strategic. We have occasionally received feedback for not hodling everything we mine. However, I want to be very clear. A 100% hodl strategy comes with a significant downside for shareholders. We believe that opportunistically selling and strategically growing our Bitcoin balance will be the best way to protect shareholder value in the long run. In fact, as one of the first publicly traded miners to actively and openly use Bitcoin to fund our operations and growth, we believe other miners will and are following our lead. Finally, let me spend some time talking about the use of equity. I want to begin by saying that we have not issued equity utilizing our ATM since November 19th. We also have no plans to draw down on the facility in the near future. Like you have heard throughout our presentation, we will continue to be disciplined and strategic about every decision we make, including the issuance of equity. As a publicly traded company, issuing equity will always be an option, but I want to emphatically state that we do not have an interest in issuing equity when management feels its stock is trading at a significant valuation discount to its peers. We also recognize there are other means of capital allocation which have a much lower cost of capital. Looking into the future, it is our expectation that there will be consolidation in the industry, and we want to be in the position to take advantage of accretive acquisitions using our equity as currency, but naturally only at a respectable and fair valuation. Therefore, we do see issuing equity as consideration in any M&A transactions we may enter into in the future. One final note I want to make regarding equity. We recognize that equity represents an anti-dilutive opportunity as well. We expect that as our strategy is executed and we continue the path of significant profitability, the company will consider returning capital to shareholders, most likely in the form of stock buybacks.
Right now, we use the best miners that are available. That's the Bitmain S19 series, and we will continue to do so until somebody can bring something to market that is truly better. We think it's really important that miners do their due diligence in understanding what technology actually delivers. There's a lot of claims out there. There's a lot of statements that are being made, and we believe prior to adopting anything new, we would have to do extensive diligence to make sure we're making the right decision for our shareholders, and also, most importantly, that the vendors that we select can deliver on the results that they're promising.
But given that everyone on this call is a Bitcoin bull, how does management see Bitcoin trading this year, and potentially how high against continued steep network hash rate escalation?
You know, I think that that's something where we can all speculate. We believe it's going to continue to go on a very strong run into the future, but we also believe that there's going to be ebbs and flows. And that's where our opportunistic strategy really comes into play, is we expect to take advantage of those ebbs and flows as they occur. And so, any of us could guess. We think it's got a really long run ahead of it. We think we're going to see adoption increase at all levels, both at, from a government regulatory level where it's easier to interact with, to different countries adopting it as their own, form of currency. We think that Bitcoin has a very strong future ahead of it, and with that will come increased value. Now, as it relates to difficulty, difficulty will certainly increase in the future. We think that there's going to be a balancing point. There's a lot of new machines that are coming online in the future that are going to lead to that increase. We're bringing new machines online. Our peers are bringing new machines online. But I do think that sometime midway through this year, we're going to see a tipping point where the efficiency of these new miners are going to affect some of the older miners, older generation, whether it's an S9 or something similar. And I think that we're going to actually see an unplugging event happen this year. That still means a year as a whole, I think we're going to see difficulty continue to increase. But I do think at some point, at least for a period of time, we're going to see a balancing effect where some machines that are less efficient come offline in exchange for the new machines coming online. So I'm not going to speculate what that percentage looks like, but I do think that it will be a meaningful percentage that difficulty increases this year. For us, it's about keeping a pace of growth that exceeds that difficulty. We believe we can do so, and so that's going to continue to be our intention. I think it's less, I want to rephrase your question a little bit. It's less about the relationships and more about the experience. What we are bringing to our Bitcoin business, and as I said before, that's what we are, is the energy expertise and experience that we've garnered so that everything we do going forward is with energy in mind. We really understand it, and the value that brings to the business is what lives inside each of our employees that they've gained over the past years. So for us, I mentioned one of the measurements we're going to use is efficiency. Yeah, absolutely. So, right now we have 74 megawatts under management. We're in the process of building another 20. That's well on its way. We should see that this quarter, which should bring a fairly significant jump in our hash rate. Now, as part of that, we are in discussions of both angles of that, both from a co-location side and a facility side. We believe we have opportunities to actually exceed our demands underway. We look forward to talking about those further in the coming weeks. But we do intend to both acquire a new facility and put that into use inside of 2022, and also enter into other co-location arrangements. So I think you're going to see both mid-year happening on our side with some very substantial increases before year end is our goal. We've always been able to find rigs when we need them. Now, we have entered into futures contracts where you make down payments and you pay along the way for future delivery. We've also engaged in spot pricing. Now, our belief and what we're actually seeing develop in the market is mining rig prices are coming down right now from where they were last quarter, and fairly significantly. We've seen as much as a 33% decrease in spot prices. This isn't driven just solely by the price of Bitcoin, but it's simply economics, supply and demand. There were a lot of, whether it was suppliers or other miners, that entered into future contracts with an inability to plug their machines in. That has led to a glut of miners coming onto the market. We actually expect this to continue in the coming months, where it should further push down spot prices on the miners. And we believe in taking advantage of those opportunities. We did so last quarter, where opportunistically we made a spot price purchase for immediate delivery, and we immediately were able to plug those machines in. And it just comes down to capital. I also think we're going to see spot prices of miners decrease as other opportunities or other manufacturers come online. Intel has made their announcements. There's several other announcements coming around. Some of these are going to be more credible than others, and some manufacturers are actually going to be able to deliver results and others won't. Again, we want to be positioned to take advantage of new technology, higher efficiency, better performance, rather than entering into a contract and calling it an arms race and putting down hundreds of millions of dollars now for miners that could well be obsolete before they ever show up.